Okay, boys and girls, we're going to kind of revisit the prop industry and ask a question. Should you still use them? Well, I think the answer is yes. I think they definitely have their place in the modern world, and they've evolved quite a lot. Now, I haven't changed my tone on who I use, but that's not to say you have to use what I use. There are lots of different companies out there, but I'm a good believer in sort of better the devil you know. It's why you never see me jump from company to company. I only talk about things that I personally use, and I only use 3 companies. I have my main funds, my small account funds, and a prop. That's it. Okay, and I use them for different reasons. You know, the prop is the perfect vehicle to enhance those other pots. Why? Because when it's live and it's your own funds, you have total control. Now, the prop industry, for those who don't know how it works, often works like this. You'll be given a balance. Now, it'll either be real funds or virtual funds, and you trade it and you get a profit split from it. Now, the profit split can be anywhere from 50% to 100%. Now, the way it works is very simple. When you're on 100% payouts and things like that, it's because you're trading a virtual account. The company will mirror that account into the market, so you both end up getting the same amount of money. On a 50-50, they put the money up, you do the work, and you split the profit down the middle. That's kind of the watered version of how the splits work. Now, the way I look at the prop industry is this. The account size means nothing. That's actually just buying power. The account itself is the drawdown, so that's what you want to look at, the drawdown. And then inside the drawdown, a lot of companies have what's called daily pause. Now, it doesn't allow you to have an excessive loss on any position or any day, and it'll close that position off. So in a sense, they're protecting your account. So you've got to be well aware of these little nuances and rules, because if you go at it full tilt based on the account size, well, the daily drawdown probably couldn't take it, and the drawdown itself can't take it. And that's where your prop industry starts to explode. No good. But what are the advantages of that? Well, as I say, that's a protection point to keep you in check. But also, it's a very low barrier to market. Case in point, the company that I sort of use, and I have done for quite a while, and I'll still give a little salute to Volga, right? Can you remember Volga?
I don't
German guy.
remember the name.
Yeah.
Yeah.
He's a lovely guy. He got me into this about 4 years ago because I never wanted to do it. And I ended up doing it with him on the fivers. And I'm still there. You know, have I had my hard times with it? Yes, I've had my hard times with it, but we all do. But the return on investment is huge. Case in point, let me show you. The fivers have recently had a website facelift, and the industry's kind of had a facelift as well, because I went through a torrid time a couple of years ago, and they've now come off the other side, and the companies that are left are pretty rock solid, and you don't get any better than these guys. Now, they're constantly introducing new things, and they were first to market with Trade the Pool, so you can trade shares, the FX. Then they brought in crypto and things like that. Now they're going to bring in futures. It's not here yet, but I'm just kind of giving you a little heads up. It's up there telling you that it's coming. They still have their core value products, which are these. It's the 1-step, the 2-step, and the 3-step. And the difference between them is 1-step, you've just got to pass one milestone, you're funded, away you go. 2-step, 2 milestones, 3-step, 3 milestones. Kind of get where I'm going with that. Now, when it comes to the price of the things, you can get a 2-step for $39. So your return on investment is already up because the drawdown, I can't remember off the top of my head, I think it's about $300. So you've actually taken 39 and you've bought 300 with leverage up to 5,000. That return on investment is excellent because you need one payout once you're funded, and you've essentially, anything else is just clean profit. That's how I do it. And then when it burns out, start it again and get some more profit. So when you see my small accounts build up and my vanguards, it's kind of how I do it. Just run it, and you can actually over leverage it a little bit if you want to be a bit rude, or you can just steady away, size down, and just plod along and have a good passive income. Very, very good. Now, they've also changed the way that they do their dashboard, which is here. Now, I'm in this today. Currently got 39.50 net profit after commissions, etc. And I'm running at 185 for the week. Quite happy with that. And I'm working my way steady to the next milestone. Now, there's a little bit here. I'm not sure what that's going to be, but I'll do an update when it comes in. Looking at it, it looks like it's some form of a calendar, but I can't quite see it. And then as you come down, there you go. There's my win rates, 91. Losses, best profit, and you just chug along. But also, if you want to have a little look at something, if you go on the VOD, there's all of the different webinars and teaching and everything. Oh, there's Ruben. I must catch up with you, kid. Running down, and as you come down into the workshops, well, what do you know? It's me. There I am, right there. And why is that? Because I've done very well out of the prop industry, and the guys recognise that, and they ask me if I would show other traders how to do it. So when you go into their programs, you'll get those workshops as well. And if you want to see exactly how it is, well, you just come along into the squad that YouTube offer. But ultimately, the question is very simple. Is it worth it? Well, the answer is yes. I don't stick with anything that doesn't work. I've been in business, bloody hell, I'm old now, aren't I? God almighty. Be like 30 years now, isn't it? Jesus Christ. So I've been around the block a few times, and you can see that. I mean, just look at me face. I mean, bloody hell, this isn't the face of a young kid. And that's the thing, because when you watch TikTok, you see all these young kids and they're sort of flashing everything. You've got to think about the realism behind it. You know, not many young kids can drive a Ferrari, you know, because they can't insure the bloody thing. And if they can, where do they get the money from? Because it always takes money to make money. And that's where the prop industry comes in. If you haven't got a lot of money, they can give you an opportunity to change. Because 39 quid is not a lot. You know, I mean, let's be honest. I can flick any sort of website she's got on there when she's shopping, and 39 quid wouldn't last 30 seconds.
All right.
Well, were you? No. Do you like me lasting 30 seconds? She does, actually. Get off. So, just try it. If you do want to try it, there is links below. Yes, I get a quid for your sign up. So I'm not going to retire anytime soon. But it does sort of support good things. If you're stuck, I'm always about. You'll find me on my WhatsApp. There's contact details below where you'll get my official email, all that sort of thing. I always answer you. And if you've got any queries, not a problem. I'm pretty much an open book. So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.